If you think an emergency fund is all you need to be financially safe, you might be dangerously wrong. In the next 10 minutes, I am going to show you why emergency savings alone can fail and the real system that actually protects your money, your income, and your future. Most people are told to save 3 to 6 months of expenses, and once they do that, they feel financially secure. But what happens when life hits harder than expected? What happens if you lose your job for longer than 6 months? What happens if you face a serious illness, a medical emergency, or a rising cost of living at the same time? That is when many people realize something shocking. Emergency funds have limits. Let's be honest, emergency funds are extremely important, but they are not a complete financial safety system. Think about it. If your emergency funds cover 6 months of expenses, what happens if your emergency lasts 8 months or 10 months or full year? We can always say God forbid, but it happens. Your savings will run out. And once your savings runs out, people usually turn to credit cards, loans, borrowing, and debt to manage the financial situation, which creates financial stress that can last for several years. Here is the truth. An emergency fund is a shock absorber, not a financial shield. It reduces the impact, but it does not stop the crash. And this is why so many hardworking people still struggle financially, even after doing what they were told to do. So the real question is, what actually protects you financially? Let's consider a few scenarios where emergency funds fall short. A serious or critical illness that prevents someone from working for several months or even years. A long-term job loss in a difficult economy. A major life disruption that requires extended financial support. In situations like this, even a large emergency fund can be depleted quickly. 3 to 6 months of savings may disappear in weeks when income stops and expenses continue. This doesn't mean emergency funds are useless. It means they were never designed to solve long-term financial challenges. Hence, the question that begs for an answer is what real financial security is, or put differently, what actually protects you financially. Real financial security is not built on savings alone. It is built on 4 powerful pillars working together. I explained these 4 pillars clearly in my previous video. I'll link it in the description if you want to watch the full breakdown. But for the purposes of this video, I will talk about income protection, emergency funds, insurance, and investment. The first is income. Income is the most important pillar, and that is why income protection can never be overemphasized. Your income is your greatest financial asset. It is not your house, not your savings, it is also not your investment. Your income is the first. Because your income is what pays for everything else. If your income stops, everything stops. And yet, most people protect their phones, their houses, and even their cars more than they protect their income. What happens if you get sick? What happens if you get injured? What happens if you cannot work for months? Income protection ensures that money keeps flowing even when you can't work. Without income, savings drain fast. Emergency funds are essential. I call it the buffer. It is a critical financial safety net designed to cover unexpected expenses or financial emergencies such as medical bills, car repairs, or sudden unemployment. Ideally, an emergency fund should cover up to 3 to 6 months worth of living expenses, providing a cushion that helps individuals or families weather financial storm without resorting to debt. They give you breathing room. They buy you time. But they are meant to support your system, not to replace it. Emergency funds should work together with income protection and insurance. They should never work alone. In that sense, emergency funds are meant to protect you from small to medium financial shocks, but emergency funds are not designed to handle long-term financial risks. And that is where insurance comes in. Insurance is your financial shield or armor. Insurance is what prevents financial destruction. It protects you against major risks like medical emergencies, critical illness, disability, and unexpected life events. Insurance transfers the financial burden of unforeseen events such as accidents, natural disasters, illness, or theft away from you to an insurance company. Without insurance, one serious emergency can wipe away years of savings. Beyond insurance, investing is your long-term security. Savings protect today, while investing protects tomorrow. Investing builds long-term financial freedom, retirement security, and generational wealth. Without investing, you remain trapped in a financial survival mode. So real financial safety is built using income protection, emergency savings, insurance, and investing. Now, let me show you how this works in real life. Now, let's look at two hypothetical persons, person A and person B. Both earn $60,000 a year. Also, both have 6 months of emergency savings. Now, both of them unexpectedly lose their jobs. Person A only has emergency savings, while person B has emergency savings, income protection, and insurance. The emergency lasts for 10 months. By 6 months, both emergency funds are gone. Person A now faces serious financial stress. They start using credit cards, they take loans, they borrow money, debt starts piling up. On the other hand, person B is receiving income support, their bills are paid, their savings stay intact, their stress stays low, same income, same emergency, but two completely different results or outcome. And this is where the difference lies, in saving money and building financial security. So here is the simple practical system you should follow. First, build an emergency fund. You can start by making a huge contribution into the account or fund if you have the money available, or if not, you can start contributing little by little. Consider setting up a separate savings account to avoid the temptation of dipping into these funds. Automating regular transfers from your checking account can also help you stay consistent. It is important to remember that the idea is to start small if needed and gradually build your fund, as any amount saved can provide a financial cushion in times of need. Secondly, protect your income. Your income is your highest financial asset. If you can't work for any reason, your entire financial plan is at risk, so protecting it is very critical. You can protect your income by building backup income stream, having disability and critical insurance, understanding job loss benefits, and continuously upgrading your skills. Thirdly, get proper insurance coverage. Insurance protects you from major financial shocks like health emergencies, accidents, disability, or even death. So life insurance is important, so that one event doesn't wipe out everything you've built for yourself and your family. Finally, invest consistently. Investing helps your money grow over time, beat inflation, and build long-term wealth so that you're not surviving but thriving financially. This is how you build real financial safety, not with savings alone, but with a complete protection system. If this video changed how you think about money, comment security below. And if you would like my simple financial protection checklist, drop a money emoji in the comments and I will share it with you. If you enjoy simple real world money education that actually helps you build financial stability, like this video and subscribe for more. Thank you for watching and see you in my next video.